welcome back to our StockTwits Q&A forum. I'm Brittany Umar. Hope you guys are having a great day and have plenty of questions for Scott Redler. He'll be joining us in just a second. But first, we have an inside peek into a day in the life of a trader. We want you to check this out.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win. Okay. It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon. My name is Scott Redler. I'm the Chief Strategic Officer of T3Live.com, joined with Brittany Umar. I'm so glad to have her, and we're bringing you the third version of our conversations on StockTwits. This is an open forum where you guys could send us some questions beforehand to get you high on the list so we could actually answer them. And then also, as the conversation's going, you can type in some questions, you could interact about what we're talking about and debate about it. Just don't talk, too harsh about what Brittany's saying. You can say whatever you want about what I'm saying, but if you start talking about what Brittany's saying, I'm going to come after you. Anyway, with that said, we're happy to have this. You could talk to us about the market, talk to us about our strategies, talk to us about, your life, whatever it is, get it in here. This is about the market, this is about lifestyle, this is about whatever you want to make it into. So let's just get down to it, and Brittany, fire away with the first question.
All right, well, we're getting lots of questions about the SPX right off the bat. So Scott, let's start with one from Market Picker, who asks if you think there's any reason to suspect that 2012 could end up looking like 2011.
I think that the same pattern is developing, but how it actually resolves will be the big game changer, because we all know what happened last year. Actually, the last 2 years. It seems like the last 2 years coming into this time frame, there was like a level in the stock market that everyone obsessed about. A level that if it broke, you had a lot more downside, or a level that actually if it didn't break, the correction was somewhat muted. So if you take a quick look at the chart of the SPX, you will see that there are some people talking about the potential of a head and shoulders top, which is okay. If you look here at the trends that we've been following, this has been the macro trend. Here was that October low. Here was a higher low. You come all the way up to where we bottomed on that Tuesday, right? Here's the Tuesday. Here's the low there. The low here is 1357. From there, we've had a very choppy bounce to retest the broken upper trend line, which is what we broke down below in earlier April. So sometimes you get a move off the highs, you get a reflex bounce to burn off the oversold condition, and then you continue lower. So some are trying to say, or some are starting to say, which can make some sense, that you do have the beginning of what is a head and shoulders top formation, where you have the left shoulder, here's your head, you're just now forming the right shoulder, and basically the market somewhat paused at a very crucial spot. Sometimes it pushes a little bit higher, but it didn't. And now what you have on a micro level here is this ascending channel. And as of right now, this ascending channel is in place. It has not broken down yet. For me, I've been trying to take a more of a cash flow approach in the past few weeks, as when we went into market correction right around here, that's when I went away from the multiple position approach. And within this time frame, we've had a lot of great action, both long and short. So today I did go home a little net short the spiders or net short the market because I'm somewhat anticipating that we might get a break below this level here. But really, we really need a close below the low of what today was, which is around 1370, for then a retest of this 1357, which then brings us into a really big support at around 1340. And if this were to take place, you could see somewhat of a neckline being put into place here. So with a little forward thinking, you could see the left shoulder, the head, and the right shoulder. But sometimes this neckline doesn't break and you spring higher from it. So once we get to this particular point, that's when you have to really look at the landscape to figure out what's going on with the composure of the actual stock market.
Now, speaking of forward thinking and looking at the landscape of the market, we've got one from Market 2012 asking for your general outlook for the 2012 market. How low will it go or how high will it go?
Well, at this point,
get out your crystal ball.
Yeah, I'll get it out. You know, in the beginning of the year, everyone puts out predictions. And in December of 2011, I said for 2012, I'll put out some predictions based on some resistance levels and some areas that I think will have some congestion and pose a problem. So really my expectations for all of 2012 was 1410 to 1440. We actually already met those expectations. So what happens when you meet them early? Okay, basically it turns into a little bit of a play-by-play. How does the year unravel? What do the headlines look like? How's the composure? What's going on with the leadership? And as of right now, we're in a corrective phase. So as we're in a corrective phase, the question is, how deep does it go? So far, we've been about 5% off the highs. We've already bounced back almost half of that after today, maybe a little less. So the question is that Tuesday the low? Do we create that head and shoulders format where we break the neckline and we go down to what could be 1300 or lower? Or does it hold and then we continue higher? So once we figure out what goes on when we reach those obstacles, then I could put other objectives out there. But for right now, I think anyone saying we're going to be at 1550 at the end of the year is being a bit irresponsible. Same way if someone's saying we're going to be at 1200. For now, I would say tier one if you're a macro investor, and if you're an intermediate/momentum trader, I would say do less. Trade both intraday over a few day time frame. And at this point, I do feel like if someone stole you today for 2 to 3 weeks and you had to put on an all-in short or long, what would it be? I'm like, I guess it would be short based on some of the technical indicators I've been watching, the way some earnings have come out, how we've dealt with some of the earnings reports. And I think that actually leads into the next question.
Well, we already have been in a corrective phase, so just touching on that, Turkle NYC was asking if you could name specific signs in the market that could point to further correction.
Well, I think how we've been dealing with some of the earnings. And if you recall, Google came out with earnings, it was up a few dollars, and they sold it. So that took almost Google off the table. That took the momentum right out of the trade, said you had to be a little careful there. So if you look at Google here, Google, I drew this morning. Here is your uptrend from October. It wound up breaking the uptrend, okay? Came back up, tried to retest it, and failed. This is looking weak. So with Google weak, that's one of the horsemen out of the way for higher prices. JP Morgan also came out with earnings, right? Came out with earnings on this day, right? So it opened up and got sold. Sold on what was perceived as a decent report. I know we've come a long way, but still, it was sold. So to me, that's a little bit of a bearish sign. So right now, you look at JP Morgan, here's your support. I would say if JP Morgan starts getting below 42.77, that will be a sign that we have further downside to potentially the 50-day moving average. Goldman Sachs, another decent earnings. What was it done? It was sold. This was on this day. It opened up, sold. Today we actually made some money shorted. I'll go over that a little bit later as it traded through the 114 area. That was my area. It showed relative weakness today, and I wound up hitting a low of about 112.47. So if this stock cannot get back and reclaim, just say this area, this will be another sign that we could move lower. You want to talk about other names that everyone knows for signs? IBM. IBM has been a great vehicle for the last decade. Right now, it's in a bit of a corrective phase. They came out with earnings, which were a little softer because of Europe and what's going on, and people don't know exactly where the growth is coming from. You look at IBM, and IBM right now, there's not much momentum there. It's in a corrective phase. This was after earnings. Okay, now look at it. It's below the 50-day moving average, closed off the lows today, but still could have some more downside room. So with all that said, there are just some signs that the market's tired, that we need to absorb the first quarter. So at this particular point, again, if someone stole me and said you have to come back in 2 weeks from now, you have to be long or short, which we don't have to be, and that's the beauty of being a trader, I would be net short versus net long, but that doesn't mean that in 2 months from now we're not higher, so you have to know your time frame.
All right, well, speaking of someone stole you and told you what to do, we've got one from Howard Linson asking if you had everything else taken away, what would be your 5 favorite tools for investing and trading?
Everything taken away, so I only have 5 things?
Yes.
Well, I would say 5 things that I use, okay, just so you know, because we talk about how there's not like that one thing that will make you successful. It's not the one chart pattern. It's not the one software system. It's not the one, I don't know, like holy setup. It's really like a package and a formula. So you need a formula, and usually there's a formula of 5 things, but they don't just only pertain to analytics from the market. It also pertains to your balance at home. It pertains to your discipline. It pertains to your money management. So I would say if I was only allowed to use 5 things, and it's hard to classify, I would say I would have my charts. Okay, I would have my discipline, I would have my money management skills, I'd have my balance at home, and both my hands so I could press the buttons.
Good answer. I like that one. All right. Well, from Caleb, we have, hi, Scott, your thoughts on and tips for trading Facebook stock on opening day. Of course, the stock that's everyone is talking about right now. He says, thanks in advance. You are the best.
well, thank you. Who is that?
Caleb.
Okay, I could Caleb. Well, here's the thing with Facebook. Okay, I think it's coming out now the 2nd, 3rd week of May. A lot of people had a thesis in the market for what should happen between now and Facebook, and a lot of those thesis type of situations have worked against you because you've broken technical rules trying to play with it, like a Zynga, which I'll go into after this. But for Facebook, from what I'm hearing, is guys in the secondary market, guys that are hedge funds and big money guys, they all got the secondary pricing around 31, 32, 34, 36. That's where they got it, not the new issue, not the IPO price, but they got it in the secondary market. They're locked up for a certain time period. So that's just something I want you to think about. So with that being said, for them to win, probably has to open up at 60, 70 bucks or higher, and then maintain it, kind of like what LinkedIn did. But for traders like ourselves who don't have the luxury of having just say sales traders everywhere giving you shares or offering you secondary prices with a $5 million minimum, because that's what it was, a $5 million block minimum to get involved. You need to learn how to trade the art of the first day. And with the art of the first day trading, you can make money. And we talk about the art of the first day. I talk about the strategy, which you could do on any IPO, because it works with any IPO, because it shows you supply and demand and teaches you how to trade it for cash flow. Now today, there was a good hour-and-a-half opportunity for TUMI, okay, which was an IPO that came out today. Before we go to the chart, I want to ask, Brittany, do you know that brand, by the way?
I do know that brand. Very nice leather.
Very nice leather.
Wallets.
And what else did they got there?
Bags, briefcases.
There you go. Okay, so with that said, okay, people we're very excited about it. But you also know what goes on with an IPO. You have people that flip. You have people involved in the investment group, the selling group. Sometimes they open it too high. So P.S., this is what I do for the deal. So this is what happens. The stock opens up. When that stock opens up in the first 3 minutes, usually it creates an opening print. That opening print is something you write down. It could be for Facebook also. It might be 70, it might be 80, it might be 90, who knows. Today, if you look at the chart for TUMI, this was 26.80. So if you go to the chart, you will see this was the opening price for TUMI. Okay, a great leather accessory company, whatever. Okay, this is the price. If there was any demand for this new issue in the first hour or so, it has to cross back above this price for cash flow. So in the first, I would say 15, 20 minutes, it trades down, which a lot of these things have to do to figure out where the support is. So support started coming in around 25.50. We had a small descending little channel here, right? And then once it started to break above, I know guys like Mark Sperling said, I'm starting to buy a little bit around 26, which is right there, versus the low. So that's 25.50. So what do you have there? A risk reward scenario. You're buying at 26, you have a 50-cent stop. So now you have a 50-cent window. So at least you know if it went back below this, you're out. So here's your buy area number one. And then it started trending higher. Now we're public for maybe 40 minutes. People are getting a little bit more assertive. People are getting used to the action. Then your next buy, or for it to be any good, is it has to get above the opening print, because anyone who shorted it there has to cover. Anyone said, you know what, I want to wait, they say now I have to buy it. So 26.80 was either your second buy, could have been someone's third buy, or your first buy because you wanted to see if it was going to be any good. So if you did buy it here at 26.80, you had a quick move to 27.50. That was a nice 70 cents. 70 cents doesn't sound like much, but for an active trader, 70 cents, calculated is hard to come by. Then it did a little bit of a doji, rested, and then it never pulled back below. You could have stayed with it, trailed it. Maybe you bought, tier 1 here, tier 2 there, sold tier 1 into that to book some, feel comfortable, and said, oh, you know what, I'm going to hold this. And then all of a sudden, it wound up getting a little bit more frisky, went to 28.50. So, or even a little bit higher, 28.70, so to speak. So it actually went $2 higher than the opening print. That is a successful IPO in the first 90 minutes of trading, whereas if you didn't have the new issue, if you weren't involved in the secondary and you just had the art of the first day trading, which we saw the same thing in LinkedIn when it came out. Just the back of my mind, I remember it opened at 90, went to 86, crossed over 90, all of a sudden went to 120. Happened in a few of these, okay? But if it never gets above that opening print, just means it's a soft issue. People didn't want it, it wasn't placed well, and then it doesn't deserve your time for weeks. So now after today, that might have been the trade. At the end of the day, it came down, and just like the rest of the market. So that was your cash flow trade. And now within the next 4 to 6 weeks, when it creates a new base, when we have a little bit more support, a little more data, then potential will come back to this one again. And then there'll be more opportunity. But that is the art of the first day. Make sure it gets above that opening print, see the momentum, and use a tier system.
We're actually getting a follow-up question on to me from Zen Profit asking, what would be the exception to the IPO first day trade rule that you reviewed earlier today? So we've gotten a loyal viewer here.
Well, the exception would be that it crossed above that 26.80 for maybe 20 seconds and came back below and showed no commitment. So if you go back to the chart here, so the exception would be if it came up to here and did this type of bar here, pushed through and failed, then all of a sudden there was no commitment to it, that you traded it for momentum above it and it didn't happen and goes lower, and then you take it off your screen. But it didn't do that. It went above it, held above it, got met with another bar of buying, and then it did it here. And then also this bar never took out this previous low, so it continued. So, some guys again will buy it here on the dip versus the low, so it's calculated, and then add here, sell some, hold some. And then, if you look further into it, really the trade changed once it went sideways again. And then this is the first time it broke and made a lower low right here. And that's when the trade said, okay, now it's over. Here's your wide range wake up call. It engulfed 4 bars. This is when it broke that range. And this is when guys said, you know what, momentum's done, 28. So even if you didn't sell it into the strength and you held from 26.80 and said, you know what, now I'm done. It just broke below a low finally at 27.90. You made yourself $1.30. Big deal. It still was a nice cash flow trade with a calculated plan, which is what we try and do. We try and have calculated plans.
Let's go back to Zynga, which you just mentioned before. We've got a question from Chargirl asking, she says that she saw you were in Zynga earlier in the week and wants to know what your stop was in this trade.
See, Zynga is a funny scenario because every sales trader in the world was telling me this stock's going to be 18 to 20 by the time Facebook comes out. So I let it actually break technical rules, and I said, you know what, it's going to be $18 to $20. That's my thesis. When anyone has a thesis, it's because you're breaking rules and you need to rationalize in your head why you're in something longer than you probably should have been. So anyway, after it broke the secondary price of about 12.20, I was like, you know what, this just doesn't have the support or the people behind it, so I'm going to make sure I have a tight stop. So in my head, I remember that was around 11:40, and I think I got stopped out while I was running the Boston Marathon on Monday. If you look at it without the Zynga name, I should never have been in it, because if you look here, if this was any ordinary stock, you go back to the chart of Zynga here, you will see that on a daily chart, look at this. This is a blaring. There was times to enter it. When it crossed above, we talked about, oh, you know what, back to the IPO game, we talk about opening prints. Look what happened when it traded above the opening print here. This one actually took about 2 months to trade above the opening print, and it was a good one. You could have bought it above the opening print here at 11.50, and it went to 14. Great 2-day strategy there. But it took a long time to happen. It didn't happen on the first day like we saw today with that Tumai. But anyway, look at this shooting star top. This was an outside reversal bar that got me out of some of it, and then I remember getting stopped out, and I should never went back. That was your sell signal. And that was actually, some people got short there, and you put a stop in versus that high there, and you were able to ride it all the way down. So PS, you had a bit of a, ascending channel here, uptrend. This was, you broke below, came back above. That was a way out. And then also, I do believe that when I got stopped out, it was on this day right here when it broke below this little range here. The range was, 1125 to 1140. I had to stop in. I said, if it breaks below this, it's not any good, and I got stopped out at 1140, which hurt because I was in it from 12. So I lost 60 cents, but big deal. If I didn't have accountability and I didn't have a stop loss, look at the pain that came in thereafter. Close at 9.57. I saved myself $2 because I said this is the last pivot here. I'm out if it breaks. And look at the wide range bar that engulfed this entire mess. So that was another way out. So, this one would have been better, obviously, when it broke below this pivot. Look at this time, too. It broke below this pivot, which was 12.19, came back up to it, never came above it, and then broke lower. This thing's been trending down ever since this day, but because some of us had a thesis, because everyone thought it's going to be 18 to 20 bucks going into Facebook, you broke your rules. So I broke some rules, but at least I followed one of my last ones, which saved myself $2. And now maybe I'll look for some type of reversal bar. And maybe when we get closer to Facebook, it can go from 8 back to 11. And then there's your 30% gain, just not from 14 to 20.
Well, on that note, we have an interesting one from Ben who says, what does it take to build a solid discipline when it comes to exiting a trade? He notes that initiating a position is much easier than entering one. So what's the psyche behind this?
I think the psyche behind it is using a tier system. The psyche behind it is booking some, staying with some. So people asked me to go over Goldman Sachs today because I had a good short on it, and they said, how did you entered it, you had your price to enter it, which was like 114.20, 114.50, 114. How did you cover? So I'll go to Goldman Sachs and show you that this was the area here that I was watching. And basically, you have a low here at 114.45, a low here at 114.89, and then the previous low here is 114.23. So this was the area that I said, if we get below, I'm going to start shorting it. So you go to your 3-minute chart, and you will see that right here, this is where we made some nice cash flow. Okay, it right off the bat, it got hit down below 114.50, like right below to like 114, while the market actually was still strong. So to me, that showed me relative weakness. So in here, I remember shorting like tier 1 because it was still just a feeler. Okay, then on this wide range bar, I got to tier 2. Okay, and then or somewhere in there, I was like tier 1 and then tier 2 below. 114.11 started giving way, so I got to tier 2. So right away when it went below 114, I was like, okay, let me let it go a little bit. It went down to 113.75, and that's when I said on my virtual trade floor, I'm covering some. Covered about a third into this move to 113.60, so I actually made like 70 cents, but I was still, short tier just say 1.5. Then the next time it broke this low here, which was 113.76, it started breaking below 113.50. I'm like, you know what? I'm getting down to small. I just made $1 in this trade, so I booked some. And then, it wound up getting a little bit of a tail into 113. And 113.11 was a price that my floor was telling me was decent support. So I covered into that, said, okay, I'm done with it. I could have trailed some, and if I would have trailed some, all of a sudden you see here this reversal bar. Okay, this is like a red dog reversal from the other way, where it pushes to a low, comes back above. You could have bought it here with a stop there, or that's where you said, I'm going to look to see if I have to cover. And then that reversal bar also is met with a wide range bar that could have got you out of your trailer. And if you didn't do it here, look how it held higher, and then this happened again. So this would have been your out right around 13.50. So if I was more committed, I would have been tier 2, added here, cover, trail some. And if I was really trailing some the way I should have been, this would have been my out. So I would have made on 75%, and then I would have made peanuts on this last point, because still my last short was right around 14.11, and then it closed near, I guess, sloppy. Where did it close? Just sloppy. It closed right around 13.57. So, for while the trade was in motion, you could have taken your cash flow and then you could have trailed some. And by using your trailing techniques, some people would have been a little looser and said, I'm not going to cover my last tier until it breaks above my opening that price, which was 14.20. So, for someone who has a macro opinion, that's where they should have held some. But I was just trying to be a little risk averse, take the cash flow. Didn't want to have too many things on the virtual floor, because my thesis has been, take your shorts, your longs, trade for cash flow. Let's not build a new portfolio of different things as the market tries to figure out what's going on here.
All right, well, keep those questions coming, guys. We're going to take a quick break. We'll be back right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, well, we're back, and Apple's earnings are, of course, Tuesday after the close. We're getting tons of questions on that, so let's get to those, Scott. First, we've got one from Startup Trader asking just for your estimates on Apple's earnings.
Well, I'm not an analyst, so I don't have estimates on Apple. I do think that typically they usually beat the estimates and then they warn. I think what's more important is watching where the stock is going into the earnings to see what's priced in. And at this particular point, it's been trading really, really well technically. It's been pushing the envelope in both directions, but I think as far as the earnings estimate, it's a little bit too far out to talk about it. So I have to say you have to tune in maybe Monday, Tuesday, or the Tuesday afternoon. We'll see where Apple is. I'm sure I'll talk about it in my recap on Monday or my morning call Monday or on my radio. Hate to be all promotional, but it's so far away. So but anyway, with that said, let me just give you a quick and dirty of the chart. If you go here to the chart on the macro level, let's talk about what we've been talking about here. Okay, Apple has had a huge move, very parabolic ever since the last quarter. So you want to talk about earnings? Here was the last time earnings came out. If you guys have been a member of my site, you've known that I love to not really be involved in earnings because I'm risk averse. I did have some calls on this and made some money, but I wasn't in the stock. What I said is, let's see if this gap on earnings holds. Because if you remember last quarter, stock opened up, didn't get much follow through that day, went tight for a few days. My entry was right on this day. Right on, I remember 448 versus the low, which was this powerful gap. And then once it crossed above this range, this was your add. And then this is when it started to break up for momentum. And I remember selling it into the strength. And I actually thought I was pretty much I was great because my target was 500. And then it went, even further, had this reversal. And ever since then, fast forward, here we are right now. Okay, but that was a strategy after earnings. If you didn't take it into earnings, you still could have entered. And you didn't miss much. Look at this. Now, ranges are expanding. Things are getting a little bit more volatile and crazy. But lately, this has been my focus because it's been really calculated. If you remember last week, I want to show you real quickly. Remember, this was April 11th. On April 11th, okay, the stock was down. And look what happened here on April 12th. So April 11th, April 12th, 2 red days, right? 2 red days in Apple on both of those days, hovering on support. Let me show you what happened on the spiders on the 11th and 12th. You go to the 11th and 12th. This is what, the 11th? Okay, this was an inside day. I remember we gapped up, went nowhere, but it was still a positive day while Apple was negative. And look what happened here on the 12th. The 12th was a powerful snapback. You remember, so these 2 days, the market snapped back really hard, right? 11th, 12th, and what happened with Apple? Here's your 11th. It actually went lower on the 12th. Oh my goodness, Brittany, what does that mean? Doesn't Apple lead the market? Isn't Apple the horse? Isn't it nothing but an apple? Wasn't that somebody saying with the market? So that changed right there. As a technical trader, you got to say, ooh, something just changed there. Apple's showing relative weakness. Maybe I should sell some. Maybe I should get short. So with that said, I remember off the charts, we put a 60-minute chart showing the head and shoulders top with the neckline at 620 to 622. And I was also tweeting about it. So anyway, you go to the chart now and look what happened there. Okay, look at this break. When it broke below 620, the first move went down to 603. That was a 20-point move. Guys made a lot of money. This was the calculated move. And then you had even more follow through all the way down to this gap here. Okay, a lot of people didn't expect a 40-point move to the downside, but it really didn't matter because if you were in the right trade short because of the relative weakness, you could have got pleasantly surprised. So fast forward to show you how you could take trades. Some guys were calling a top here, but you didn't have to do that yet. Okay, you had a nice short, and then I had the Boston Marathon Monday, came back Tuesday, said let's look for a red dog reversal. So if you look here, 578.25 was the low. What did this do here? Went to 571, came back above. So after coming from 644 down to 575, nice 10% off the highs, it was worth a try. Some people thought it would bounce $10 or $20. You know what? It bounced a hell of a lot more than that. So if you bought it here, put your stop at the low of the day, you had a nice trade. And we also talked about the red dog reversal giving you a day and a half. So the next day, if you remember, we talked about it retesting the 10-day, which it went as high as 620, and then selling some. So you had a nice day and a half move, and then lo and behold, today it was weak. But if you were a member of the virtual floor or even in our chat room, I actually made my money on the first opening moves. It shows you your time frame. Apple was like $5.99, and I tweeted, I said $5.94, $5.96 is an area that I think is viable for cash flow, not an investment, not for days, cash flow. So all of a sudden, it went back above $5.97. I said, I'm buying it at $5.97. The low of the day was, I think, $5.95.75. I go, my stop is $5.95.50. I was giving it $2. Then all of a sudden, it bounced to $6.03, made $6, made a nice move on it. Cash flow trade in a corrective type market because I'm not sure what direction it's going to be. I want to add to my year, add to my P&L, and that's what the day deserved. And then later in the day, it wound up falling apart. And now, if you go back to the macro chart, we'll look at here. It's looking a little bit like it could be at the start of the right shoulder also. So we'll see where we are come earnings because you have the left shoulder, the head. This could be now the right shoulder, and this whole area could be another neckline. This was an upper one. This could be a lower one. So it's probably going to be somewhere around here perhaps for the earnings. And we'll have to see what the earnings do, how they deliver. I do think there is something. So if you want to speak like, I'm not a sell-side analyst, if you want to just talk perception, the iPad, I know for me, I will never buy another laptop again. Will you ever buy a laptop again?
I still have my laptop, so.
Look, I have one too. I have a Mac Pro from 3 years ago, but if something happens to that Mac Pro from 3 years ago, I'm not buying another laptop. Okay, and chances are I've bought 7 iPods in my years, and now I have an iPhone, and I actually use my iPhone a little bit like an iPod. I might not be as motivated to buy an iPod. So they are sort of cannibalizing their own product line, but they're also taking market share from everyone else who's not Apple. So I don't think they need to have stupendous earnings, but it has to be priced well. So by discounting the stock going into the earnings, they don't have to be blockbuster to take off. Like if the stock was trading at $6.44 going into earnings and the estimate's $9.50, it better be $12. If we're trading down at $5.70 and the estimate's $9.50 and it's $10.80, it could bounce around. And again, if you look at the growth numbers, it's trading at a PE of 16, a forward PE of like 11, and it's still growing well over 20%. So I don't think it's fair valued. I think they should split their stock 3-for-1, do it better than Google that did 2-for-1 and mismanaged it. And I would say the highs of the year are not in there, but I don't have to say that yet because there's a lot more data coming.
Well, sticking with Apple for just a second, as we were looking at the chart and the possible pattern that you're potentially seeing, Alex was asking how low you think Apple will go as it retests this week's move down. And what do you think, what do you look for next to get back in long?
Well, it all, again, depends on the time frame. 2 days ago, I was looking for that red dog reversal with 578.50 as the pivot and that gap. So you go back to the chart. So we'll see. Tomorrow's Friday, earnings are Tuesday. You now have a 2-day move, okay, down to coming into support. So we have 1 point of reference tomorrow, which will be 584.52. If they open up tomorrow, up a little bit, because I think Microsoft was up and the futures are up a little bit, does it fade, trade through the low, and retest this area? Or does it open down into this area and can it be, bought? So it all depends on the story here. But these are your 2 pivots to watch. You have 584.52. You write that down. You write down 571.91, and then you write down this 50-day moving average, which comes in right around here, which is, what is the 50-day now? The 50-day has moved up to 567. So 1, 2, 3. You'll have to see how the futures open, where the stock is, look at the divergences to see how to trade it. But that's your area to watch for now.
All right, well, let's move on to another one. We've got a question from Levaco asking, talk about the back and forth action that we're seeing with LinkedIn and where you think it will break out or down.
LinkedIn has been, I think it's acting really well with what's going on with the market. I know I was involved when I had my portfolio approach. It was one of the 8 to 12, and I have traded it for cash flow. Lately, I've been avoiding it a little bit because it's a little wide, and you have to really, I've been tuned into Apple, not tuned into LinkedIn, and if I had 6, 7 to 10 positions and I thought we were in a macro uptrend, this would be one of them that I'd be holding. So for now, I'm not, so I'm going to just look for cash flow setups. If you look here at LinkedIn, I still think it's acting very well. Today, it didn't have the momentum to break out. I tweeted about it saying if we can get above 107.50, 108.50 and stay above it, it could see some future action or more action. If you look here, you have a real defined level of resistance, okay? If you remember, last time I got excited with this, you had your defined set of resistance right around 95. Okay, so at this particular point, It's well above the 50-day. It's actually acting stronger than Apple. It's above all these moving averages. So it is showing you relative strength. So what do I like to see? I like to see relative strength. So take a closer look here. From a macro or a micro level here, if you're long it and you're uncommitted, you got to use 102.50 as a stop, because if it breaks that, you might not be able to stick with it. I would say more on an intermediate level. If you long it, your real stop should be actually around 94. And I know that's a lot between, that's about 10 points, but look what happened here. This was a pretty nasty day. This was a day that I got stopped at a lot of stuff on my run. Okay, but it got engulfed and came right back up. So they said they made it like this didn't happen. So if you were a macro investor in LinkedIn and you got out this day because this was harsh, you probably didn't get back into it. And now if they deliver on earnings and they make new highs, which I do think they're in the game for that, you're out of it. So you have to know your time frame. So next time I probably get back involved in this thing will be if it could continue to hold sideways above 102, and I will be a buyer for momentum, and that comes in right around that high there is, let me take a close look, right around I think 108. So this will be the next area for action as it goes through 109 to 112. Let's hope it happens intraday. Unfortunately, it'll probably happen during earnings.
Okay, well, speaking of earnings, we're getting lots of questions about Chipotle earnings. We've got ones from Money Duck, Market Picker, giving all you guys shouts out. Money Duck notes that the stock hasn't even paused on the way up and wants to know what would need to materialize for you to get short.
Like a Netflix situation where it breaks a trend, it shows relative weakness during a rally in the market, doesn't come back, and then you could reshort it. Anyone who's tried to short the stock has not done really well. I know that they came out with earnings today after the close. I'm not exactly sure what they're doing. Let's see what it did today before the earnings. So if you look at the chart of it, you'll see that the stock's been in an unbelievable trend. Okay, there's been some times to buy it where you could have had momentum. This is when it cleared the first pivot right here. And ever since then, look at the strength of this trend. No reason to fight it. Okay, so with that said, trends do change. Okay, and here it is, riding a trend. It's been going up really well. It's still above the 50-day. It's still above these averages. It looks good. Today was a little weak. Some people were probably a little worried going into earnings, because if you are a momentum trader, it could be up or down $30. So I wouldn't be taking it into it. If it were to break below, let's just say 420 to 423, and not be able to get back above it, okay, then potentially the trend changes and you could see a nice correction. But right now, riding this trend has made sense. I'm not exactly, let me see something. How do I get, let's see if you can see the minute chart. Is it trading right now? No, you can't see it right now. But so I can't give you the most accurate. I could have one of my my guys in the control room go and see where CMG is trading. So one of you guys in the control room, go check it out. And after the commercial break, I'll answer the question on what to do at CMG potentially after earnings. So let's go on to the next question.
Okay, well, speaking of CMG, this is a nice transition because we just got one from Lambeau Fund bringing in PNRA. They said they were weak today, but with CMG reporting, what's the short-term outlook for that stock?
This also has been a strong stock up until lately. This is the same type of scenario here where this was the last gap up, okay, which held. Okay, then it started somewhat of a new trend, right? New trend, going higher. Finally below the moving averages. 50-day caught up, broke the 50-day. This would have been a spot to, if you were a momentum trader, to exit. You would have gotten out here because you had your upper level. Okay, it closed right on it. So if you were in it, you could have seen the writing on the wall. Some guys probably went out short, and once it went below this low here of 156.59, that was your add-on short. And now, I guess depending on what Chipotle came out with, we'll have to check it out. But sometimes what you do get is you get a retest of this broken trend line, but if it can't get back above it, that's your area to short it for what could be another move lower. So at this particular point, I think that the 165 down to here is your first leg of the short. Now the question is, does it bounce back and can it be reshorted, or does it just continue lower? At this point, I guess you have to wait for its own earnings and know what you're looking to do with it depending on the time frame.
All right, let's stick with food and beverage here because we've got one from E. Hinkle asking, with coffee futures in a downtrend for the year, is there a reason why you prefer Dunkin' over Pete or Starbucks?
You know what? This has been a great question because Starbucks has been an unbelievable winner, and it's just a different type of trade. Starbucks has been a momentum trade. It's been an investment for the last decade. There's been trades, intraday every few weeks, and it's been great. So for me, I actually wanted Dunkin' to be more like a 401k IRA stock, well, not 401k, an IRA, where you put it in, you forget about it, and then from time to time there'll be a trade. So guys from my community, I've been just trying to give them some confidence to hold it as long as it acts well. And I actually got stopped out today of that stock, and I felt a little guilty. I'm like, I have this whole virtual trade floor I'm holding is Dunkin', and Dunkin' doesn't do anything. You know, it's not a leader of the market. So for me, this was, you know, a different type of thesis. And there you go again with the thesis. You look at Starbucks. Starbucks has been unbelievable, right? Starbucks, last time I was on here with Jill, this was the short, you know, this sideways action till finally it broke out. And this was a beautiful breakout here. I remember seeing the strength here, buying it here. I think I sold it on this day, thinking I was a champ, trading it from, you know, 48 to 53, and then look at the move in Starbucks. Actually, as I look at this chart, it's telling me it's in a little bit of trouble here short term. You know, you had an outside reversal right there, which finally was the first time it happened that could have got you out of the stock. Came down 2 days, rallied back up, just engulfed it today. It's on this ascending channel here. So I would say this could actually be a short-term short, or at least get out of the way if this were to break below 58.50. So this is your action area. This breaks below this, you know, you're going to see some downside type action, and rightly so, considering look where the 50 day is. The 50 day is all the way down here, and that's actually, you know, kind of where I sold it the last time. So anyway, you have an uptrend. It's now getting very choppy. I'm seeing distribution up here. So I would say be a little careful if you're in more than a tier 1 of Starbucks. If you're in a macro holder and you believe in it, you held it for 3 years, you can hold it for another 3. Don't worry about it. If you're an intermediate trend watcher, this seems like it's in jeopardy and could be broken to the downside with here's support and here's another support. And as far as Dunkin', you know, I kept it tight today. I probably didn't have to, but when I left the office, I was just like, I was like, let me just put a stop in right here, just because I don't want. I'm trying to be have a thesis where we're in a correction. You shouldn't be holding really anything as an intermediate trend watcher, and that's what I am. So here I got stopped out. So I will not be back in this stock until it starts crossing between 32 and 32.44 for momentum. For a macro investor or someone who's on his IRA, I do think the stock's only been public for not even a year, and the pattern looks good. And as long as it stays above this, the price from the secondary, which is around $29.50, don't get out of it, because I did. I just get out of it because, you know, I'm in a different position than you are as far as visibility, and I don't want to lead people in the wrong direction.
All right, moving on. Let's talk SXCI, because Don in Atlanta first says great job running in the Boston Marathon, but then also asked for your thoughts on SXCI. He says it held up well today in a tough market.
SXCI. Okay, let's take a look here. Stock that I don't usually trade, and if you look at it now, I should be trading it. Unbelievable move. Last time, I guess, you know, you can look at things technically. If you look at this area of resistance here, which goes back for months, this was a time for a core trade. Once it got above this area here and this level here, for that was 66. Okay, so that was then. Okay, and then you had a big move up. This was a bit of an outside day, which caused a rest, and then it went sideways again. And now it's in somewhat of a, you know, of a parabolic type move. I don't recommend buying anything at 97 after you could have bought it here. You could have bought it again here, or maybe even before this. So at this point, you know, like we talk about exits. The last time we talked about exits, people were like, how do you exit a stock? In this one, it feels like every exit's a bad exit because it continues to go. But don't be sad about booking profits. That's why you're in a tier system too. So just say if you are in tier 2 or 3 right now, congratulations for holding. You must have been sleeping, because I would have sold it already. Sell a few tiers into this strength. Hold some if you're a macro investor, but don't just initiate a trade up here just because you see this, you know, showing relative strength, because it's in the midst of what could be a parabolic move that when it ends quick, it ends harsh, and, you know, it's hard to stay with it if you're uncommitted.
All right, we've got so many more questions to get to. Keep them coming. We just have to take a quick break. We'll be right back.
I'm in a little MGM, and I'm still in OIH. I bought it this morning at 107.50. You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners, and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is in a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265. And if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade, and I could provide for my family.
Where was the breakout? That is the next evolution.
Human Genome Sciences was on everybody's radar today after they rejected a bid from GlaxoSmithKline. So we've got a question on the stock from Audubon asking, what are we doing with HGSI?
Well, the question is, do you own it? Do you want to own it? And what are you playing it for? I looked at the chart this morning just to see if anybody knew that this was coming in, and I tell you, they kept a tight deal. Nothing in this chart told me that they were about to get a hostile offer or whatnot. If you take a look at this chart here, you'll see that HGSI has been like dribbling lower. So it wasn't even as if, something got out there. So good job, no one's going to jail. Here you go. Big gap up was what, as high as 1461 and as low as 1404. These type of situations are dicey. I think that the majority of this gain, that if it was taken, if this was a potential takeover, if they want higher, we all know what happened with Yahoo when they wanted higher than 32, or Potash when they wanted higher. Sometimes, if you're a chasa, you know what a chasa is?
No, I don't.
You never watched Scarface back in the 80s?
Oh.
You're young. You're like 18. No, I'm kidding.
And I'm not a guy. So.
I'm not a guy. So anyway, chasa is a pig that doesn't fly straight, meaning take what you can get and run. Hopefully Yahoo should have done it at 32. Anyway, so by them rejecting the bid doesn't always mean that they're going to get a higher bid. It just means that they might scare someone away. So with that said, you go back to the chart. I think if you're buying it in this area because you think, oh, now because they rejected it, they're going to get a bid for 18 or so, I think that you're being a little speculative. And if you're a trader intraday, and you want to potentially short it, if it gets below today's low at 1404 because you think it's going to fall apart, maybe you get a scalp. Or intraday, it starts breaking above yesterday's high, which is 1461. Maybe it has a further of a squeeze, so that's how I would play it. I would just scalp it. I wouldn't just be re-entering HGSI because you think they're going to get another bid because they don't think that this one's high enough because they're being a you-know-what. Could you say it?
Yeah.
I want to see you say chasa. Okay.
All right, I like this one from Chase. He goes, hey, Scott, congrats on the marathon and hope all the best going forward. But, man, is now the time to buy Schlumberger?
I think a lot of people have been trying to say is now the time to buy Schlumberger. And actually, you saw Halliburton's numbers, and that was pretty encouraging because I feel like whenever I talk about Schlumberger, I talk about Halliburton, and I don't know both of those stocks that well fundamentally, but I know whenever I want to buy a refiner or a driller or something in the OHs, I would buy them, and it hasn't worked this year. So if you look now, first at SLB, let's see the chart. At this particular point, let's take a little bit of a broader scope here. It's still not, showing you much. Let me put that over there. If you recall, I tried playing this a few times. Once when it was trying to break above this resistance here, if you remember. Here is your inside range. It tried to break above. It was like a breakout failure, and now it came back in. I guess you could say if you want to buy it in the hole, you want to buy it versus a level. Here it is. Okay, this was the low of 66, which goes all the way back to November, December or so. So with this said, you just had a little bit of a move off the low. It's below the 50-day. It's not above, so it's not providing any leadership. It's below the 200-day. So at this point, it's trying to nudge above this bottom of the range. So if you want it to be in something because you feel like you love Schlumberger, which at this point no one really loves it this year, you buy a little bit, here's your stop. And if it starts acting better, we'll figure that out later in the year. And as I spoke about Halliburton, let me just take a quick look there. Even Halliburton, that came out with good numbers that I think Goldman Sachs upgraded. This is what your move was from here to here. Okay, the 50-day stopped it. Not really that compelling. You look at support going across here. this is just not the place to be. I'm sorry. You know, if you want to hold it in your portfolio and you think you're a macro investor and you love it and you love the name and you believe in Goldman Sachs for upgrading it, fine. I'm not going to tell you. I'm not your stockbroker. I'm a trader. I'm just trying to show you where the action is and what I would do technically. At this point, both of them technically don't look great.
All right, well, we just got one that sort of correlates to what we were talking about with the human genome bid from GlaxoSmithKline. We've got one from Trade the Setup who asks, do you ever use news and technical analysis to trade? If yes, how do you execute it depending on the type of news?
Oh, you have to use both. A lot of people say, you know, if I'm a technical analyst, I don't need the news, I don't need the fundamentals, I don't need anything. If you're a fundamental analyst, I don't trade with technicals. You know what, in order to be successful, you have to combine a little bit of all the worlds. You have to know what's going on in the news, what the market's obsessing about, and you also have to know where the stock came from to figure out whether it's priced in. I'm going to use JP Morgan as an example because JP Morgan, as an example, okay, got a little beat up off the highs, and I remember playing it long, and it had a nice 2.5 day bounce into the earnings. Okay, the earnings wound up coming out in the morning. I was not at my desk. I don't know exactly. Actually, I was on my way to Boston, and I said to my staff, I'm like, you know, I sold it before earnings, and everyone's like, oh, it's up. And then what do I do with it? I go, probably just sell it. It's priced in. It just had a 3-day move. I don't care what the earnings were. They'll probably sell it. If it didn't have the 3-day bounce, maybe it would have been up on the news, maintained on the news, and had follow through. But because JP Morgan went from just say this low here, because this is where I bought it, all the way up to here into a trend line, which technically causes resistance, on the news, they sold it. It wasn't down like here, because then maybe it could have ran to there. Instead, it ran before earnings, which you had to know. Then on earnings, it sold. And sometimes, like just say like a SanDisk, for instance. I'm just throwing it out there, okay? Because people are telling me, oh, maybe we should take SanDisk just for a play. It's been so beaten up. SanDisk just came out with earnings tonight. I didn't see the whole report, so don't quote me or you know, whatever, or bash me. But from the look of the report, it looked weak. It looked like they missed on guidance, they missed on revenue, they missed on a lot of things. And it was down $2, and when I came in here, it was only down 50 cents. So if you look at SanDisk that went from here, okay, all the way in the 50s, all the way down to 40, okay? And if you look where it was, you know, earlier in the year, it actually looked really good technically. A lot of people got stuck in this 50 area, so it's come all the way down to 40. So it's been sold off before the news. So what you want to see, so what might happen here is on the news, it might not go down anymore, show that it's priced in, and then you get your bounce because the news is out, and then it's forward looking. So, you know, the stock just came from 50 all the way down to here. This stock might, you know, be up a few bucks tomorrow, and people are like, I thought the report was bad, I thought they missed, I thought they got it lower. They did, but look what the stock did beforehand. If they did that and it was up here, that wouldn't happen. But they already did this, so you need to know what happened before the news to then figure out whether the news is priced in or not priced in.
All right, well, Monday after the market is Netflix earnings. So we did touch on that before. We didn't get to dive into it too much. And we have a question from MSP Zoom, just asking for your thoughts on playing Netflix right now.
I haven't been really that active in Netflix. Today I actually thought I would trade it just because it was downgraded, and for some reason Netflix always likes to start off negative and go up because everyone shorts it on a downgrade and it runs. So there was a good trade. A lot of my guys on the desk made some money short term, long it. But recently the pattern's been somewhat broken. In the beginning of the year I was all over it. It was my go-to stock. The way the last few days Apple's been my go-to stock. If you look, you could see why. You know, Netflix at the beginning of the year came all the way, obviously, if you look at last year, first of all, you know, stock got crushed from 300 all the way down into the 70s. So, you know, just to show you real quickly again why we talk about trends and when they do change, I'm not going to get into the whole thing, but look what happened when Netflix broke this trend. Look at this trend. Here you go. Here was your big long uptrend that was intact. High, higher high, higher high, higher high. You know, top. This was, you know, if you look actually right here also, you'll see that this bar engulfed, creating a really big top right there. But anyway, I'm not going to get so enamored with that. So anyway, this was your, you know, your little invitation to get out. Here's when it broke the trend, and then since then it just, you know, got crushed since. So coming into this year, I'm like, let's see if someone's trash is my treasure. You all know that thesis. So here you are. I wanted to wait for some type of igniting bar, and I'm making a mockery of this chart right here. And here you are. This is when the trade ignited, and it was very tradable and very calculated. It was right here. The stock broke above this 70 and change. Quick 3-day move. Went as high as 133. Here's your red dog reversal. This was your sell signal. Since then, then it came in, and then you had another entry to the downside, and then show you how a trade changes. Remember that descending channel we talked about right here? This was a descending channel. Okay, we started talking about it. It was in virtual trade floor. It was in the morning call. Said buy above 111. Went to resistance. There's your point of reference right there. And then it never stopped here. If it was stronger, it would have stopped around 114, 116 and held higher, showing demand, and then continued. It didn't. It paused and then continued lower, showing that nobody felt like they missed something from here to here. And now you just had a little bit of a reflex move. I guess you could say, it's still 107. It's still more than 30% higher for the year. So depending on your entry, you're still doing okay. I guess it's going to really depend on the numbers. And at this point, I don't think it's going to need to be a blockbuster report because it's not a 130, it's a 107. So I do think come Monday afternoon, if you really want to tune into my radio or go to the virtual floor, I'll probably tweet about it. I'll have more of a strategy. But for right now, the ranges are small. It's been out of play. I've been just avoiding it. There's been better things to trade. Come Monday, we'll revisit it.
All right. Well, speaking of ranges, let's pull up the VMware chart because we've got a question from Market Picker asking what you think of VMware's tight open and close range today.
This is one of the reasons why I think maybe we have more downside or a small downside. The cloud computing sector was really strong today. The market opened up flat. This stock I was talking about buying it quickly between 114, 115 for a breakout. But again, the rule is a stock breaks above a momentum level, you stay with it only if it stays above that momentum level. And if you look here at the chart, this is not great for a trader. Okay, it opened up, traded above, okay, this momentum high here of 115.19. Did get as high as 118.79. So if you were quick and you took your trade, you did okay. But then look what happened. It then traded back below that pivot high. So you had to actually get out of some. I know the market probably brought it down also. So it closed at 113.75. I wouldn't say it's game over, but from below 103 to as high as 118, it might need time. So for now, if it's a macro investment for you, I would still stay with it. It's still strong. As a trade, it's probably going to need some time. And now you could trade it versus today's low. Okay, so if it could build a new base and go sideways and hang out here while the market still corrects or sifts itself out, then potentially it gets back on its horse. But I think with today's action, it's going to need some time to digest what could have been a really good breakout that turned into a bit of a distribution day for that stock.
Okay, trying to get in as many questions for you guys as we can. We've got one from Audubon just asking for your general thoughts on Ren, Scott.
Ren last week was one of the stocks that held for like 4 days. And Ren was a stock that had a nice tight pattern, and it still does. And I actually got stopped out of my remainder, which I'll show you the tier system, I think right around 740. And I still have my eye on it, and I still think on a macro level it can get to like $10. A lot of people thought their accounting was a little messed up. A lot of people thought it was a Chinese small cap, that it doesn't deserve your attention. But I think it's getting a little bit more credibility. They've announced a few deals, one with Intel, something that they want to buy Rovio. They've been more in the news. The CEO is on Fast Money. So I do think that there's more of a future in this stock than people think. For me, it was about the price pattern. If you look here at Ren, you'll see that even though I'm out of it, it doesn't mean it's over. This is what I loved with this stock. You had a nice, tight, long channel. Okay, let me get this out of the way here for you. And I'll put this over here, my little Quotron. There you go. And it was calculated. I like calculated scenarios. Here was your wake-up call, right? This was when it went from like 4 to as high as 6 and change, got negated. Look at the size of this Poen bar set, just says it needs time. And look at all the time that it needed. Then you draw this chart. This wasn't off the charts. We had it a few times. This 590 to 620 area was your pivot buy. So I bought here, I added here, and then I had it on my virtual floor, so it gave confidence for people to hold for what was almost a 20% move. Okay, and then on this day, when it made a new high, came back below, I had instructions to sell my remainder at this high here, which was 745, and if you're on my virtual floor, you saw it leave. So it left, and now it's holding higher. It's going sideways again. I do think it's worthy of a tier 1. You could be in a tier 1 Ren versus this low here of 660, because it held the top third of what this overall move was. And then if it starts getting above this 745 again, it could potentially continue, because if you look at the weekly chart, it does have a lot of room. This thing was as high as 24. I know guys in China who actually bought it in here saying that, Facebook is not allowed in China. Ren is the only provider there, so there's a big story here. So if that's the case, look how this can go sideways with this weekly bar. If it stays above this and shows commitment, there's no reason why it can't get to this next resistance zone, which is around, I don't know, $10 or so. So I think we had a really nice trade here. Don't let it go off the radar. I think that could be another continuation move, but let's hope that their earnings, show a little consistency and there aren't any spotty holes in what has been some of these Chinese earnings reports for these little companies, which has caused a little bit of skepticism.
All right, well, this just caught my eye. A question from Green Dog for Red Dog.
Hey, Green Dog.
Green
He's
Dog
back.
asking for a detailed example of a Green Dog reversal. Do you watch the 3-minute time frame? Details on bar action? He's looking for the whole shebang.
What's a Green Dog reversal? I know the Red Dog reversal. Is he trying to name up a new little strategy there? Well, the Red Dog reversal is it's like an outside day. It's how to play a counter trend move within a big type of correction, whether a stock's had a huge move to the upside and you're trying to find a calculated short versus a high instead of just short and getting put out of business. Same thing from the downside. You don't want to just buy a falling knife. Now I'm going to go back to Apple and give you an example of why on Tuesday it was the perfect Red Dog reversal, because it doesn't matter what time frame you were looking at, you could have made a lot of money. You could have made money scalping, you could have made money as a swing trade, you could have made money for a day and a half, and it still could be an inflection point if you stayed with it, but it already negated half of it, so I'd say it's out of the way. So if you look here at Apple, you go back, okay, let's go to the daily chart. I've done a lot of little lines here. Let's just talk about risk reward, okay? The reason why this strategy, can work. Let me get this out of the way. Stock was as high as 644, okay? What it did is it broke below this area of 620. So what did people say? I got to get out of the way. That's a short. Look what happened on this day. Went down to 605. Okay, so now here, came into support. People are saying, you know what? Maybe I try it versus this low here. The low here is 603.51. 603.51, maybe 40 points is enough. Maybe it's not. So here, it traded below 603, and there was no support. No one came in. No one said this is cheap. And people who shorted this low made money. People who shorted this low made money. So now you have shorts making money, longs getting stopped out. So now you fast forward to this move, to Tuesday. What changed this time? Stock opened up, if you remember, traded below 578.25. So people probably said, oh my goodness, it's going below the low. Maybe we get a move to the 50-day moving average. So people who shorted this low, the way they shorted this low or shorted this low, what's the word? Chasa. They went back to the well one too many times. So what happens is all of a sudden it goes below, comes back above. So this is your entry. So if you shorted the stock here at 578.25, okay, I'm going to give you a inference. You're not even a trader. Okay, you know a lot about the market. You shorted the stock at 578.25. It just came in 60 points and it went back above your price. Would you feel comfortable or would you feel like you're in a winning trade?
I don't know.
It just came in 60 points and it just triggered above. You know what? You chased it down. Same way if you tried to buy it at 600 and then you said, okay, I'm going to buy it at 580 and put my stop at 578.25, $2, and it went below and you got stopped out. Right. Okay, so you said, okay, I'm being risk averse. I'm getting out of my stock, which is what you do if it breaks the low. Then all of a sudden you're out of your stock and it gets back above and trades above 582 and you don't have the stock. How do you feel?
How am I supposed to feel?
You're upset because it just stole your stock. So you have shorts that have to cover because they chased it down. You have longs that got stopped out. So it creates an action area for a cash flow trader like me to jump in there, know the risk, know the reward, and go after it. So the real trade to do is on the chart, you buy it at the low. Once it crosses back above it at 578.25, I cheated and bought it at 575. Okay, and then you put a stop at 571, so you have your risk. So you bought it here. It's like $6-7 from something that just pulled off over $70. And then you could have just closed your eyes and trailed it and said, I'm not going to look at it for the rest of the day because I have my stop. And it closed at 610. So you could have made $30 on a $7 stop. And typically on a Red Dog reversal, you usually get 2 days. So I remember tweeting saying through 610, you're probably going to get another move to retest the breakdown or the 10-day around 612, 618. And there you go. So here was your 2-day trade. And then now it's come back in and we'll figure out what the next trade is. But this is a strategy to catch a bounce or to play a bounce. You could do it both ways. It actually worked here also where the Red Dog reversal to the downside, right? Big move from 460 all the way as high as here. It traded through the high, came back below. You could have had your you're short at 509 with a stop at the high of the day, 526. It closed that day at 497, so you made 11 points. And then the next day, I remember it opened down. We went to 486. You could have made 30 points that way on this reversal. Wound up getting engulfed, but a nice calculated strategy for some type of reversal.
All right. Well, thank you, everybody, for tuning in. Thanks for all the great questions. Hope we helped you out today. And, of course, we'll be back next week.
Yeah, so make sure to tune in, tell some friends, try and answer some different stock questions, some different strategy questions, come up with anything that's creative. We'll be here. We'll try and answer them for you if we can. And, it's Thursday night. It's been a long week. Have some fun. Enjoy life because you know what? You did a long time. See you later.
Bye, guys.